Hello and welcome. There is something I do not want you to do because if you do it, you could lose out. Do not worry about home loan interest rates. Seriously, don't do it. In this episode, I'm going to explain the reason. I'm Ron Pieper. I am the principal real estate broker for Veteran Realty located here in Virginia. And that wasn't the reason I mentioned. That was my introduction. Unfortunately, let's talk about the reason now. Unfortunately, there is a lot of dramatic rhetoric in news venues and other communication circles about interest rates, especially when they go up. It's seemingly everywhere. We hear that higher interest rates equate to higher cost of home ownership, namely in our monthly bill payment. Folks, a higher interest rate does not always equate to a higher monthly cost. It doesn't. And why doesn't it? Because there are multiple factors in combination that determine that monthly cost. And those factors include things like the amount of money you borrow. Most people get that one. The sales price of the home, property taxes, utility expenses, maintenance, HOA, and condo fees. And yes, the interest rate applied to the amount of money you borrow. So when some of these factors increase, we decrease others to mitigate the impact. It's really that simple. So let's walk through this with an example, a couple of examples, in fact. I'll use an example of buying a home at $500,000. I'll use this figure to keep math simple for me. Let's say your lender requires a 5% down payment, which would be $25,000 for this loan. That means you would receive $475,000. $475,000 with a 5.5% interest rate yields a monthly principal and interest payment of about $2,700, $2,697 precisely. $475,000 with a 6.5% interest rate yields a monthly principal and interest payment of $3,002. Now, I see many people getting interest rates in this range, and for a whole interest point difference, the increase is only $305. And at this point, some people may not want to go further because $305 is above their pain threshold. And that's fine. It really is. You need to decide. For most people I meet, when I talk through scenarios like this at varying price points, they're happy with what they see. They often are those folks who let the news reporting and interest rates or news reporting of interest rates scare them. And by doing their own math, they learn that they have home buying potential. Let's consider increasing the down payment to even just 7% in this scenario, vice the 5%. On that same $500,000 loan, the down payment would now be $35,000 instead of the previous $25,000. The balance of the $465,000 is the amount of funds you receive subject to an interest rate. With that higher interest rate of 6.5%, for example, the monthly payment of principal and interest would be $2,939. So just increasing the down payment by this little bit saves almost another $100 per month. So let's talk about the other factors I listed. Buying a home at a lower price obviously will help. Compared to that other $500,000 house at 5.5% interest we just reviewed, say you buy a home at $475,000 and still pay at a 5% down payment. Getting a loan for that home at 6.5% interest yields a monthly payment for principal and interest of only $2,852. So by just shopping for a slightly less expensive house, it's probably the same kind of house that you were looking for before, and still getting that higher interest rate, the monthly loan payment comes down quite a bit. Property taxes vary by location, the size of the home and the land, the rate set by the municipality, and some other factors. Where I work, a homeowner's monthly tax burden can vary by $100 or so just across the county line. Look for locations where you can save money on property taxes. HOA and condo fees are part of that monthly home cost too. I find these fees ranging from under $50 a month to several hundreds of dollars a month where I work. Choosing the right neighborhood can save or cost you a lot of money. Sometimes buying a slightly smaller home can lead to lower utility and maintenance costs as well. These savings can easily offset the impact of higher interest rates. And there's also the potential to get a lower sales price on that smaller home. Okay, so I'll repeat. There are multiple factors contributing to your monthly home cost. This means you have good opportunity to work with them to save money and curb your concern over interest rates. Don't hold yourself back. Start by consulting with multiple lenders and a good real estate agent who can help you navigate this process. Now, I say multiple lenders because no two are alike. I live this every day. No two are alike. I have had clients disapproved for a home loan by one lender and the same day call on another one and get approved for everything they wanted to borrow. And they find a lender who provides lower fees sometimes and other benefits to help them save money. So let's do some good homework. Thank you for listening. Cheers.